good, YouTube? Hope everyone's doing well. Hope everyone is blessed and had an amazing trading week. We are back again with another market overview, #5. So if you guys are enjoying the content, yeah, again, make sure to keep liking and subscribing so I can carry on producing you guys these videos. And if you're looking to, receive some more content, besides from, the market weekly overviews, and drop me some comments below and what educational videos you want me to produce, obviously based on Forex, based on trading. But what videos you want me to produce, something you're curious about, what educational videos you want to see in the future. But for now, I'm going to stick with the market overviews. This is now number 5, I believe it is. So we'll jump straight into it. This week has been an amazing week. I've caught trades on pretty much all of my pairs throughout the week. GJ, UCAD, Gold, and also EU. The only one I haven't actually got any trades on is GU. That's because, I wasn't sure on the directional bias. I had other third parties, claiming it was going to go bullish, whereas me personally, towards later on in the week, I was more bearish. But so I just stayed out of it. When you're not fully confident in your bias, then just stay out of the market. Simple as that. But for now, I'm going to jump into my first trade on UCAD, and then I'll go step by step through each of my pairs. And just for the purpose of keeping this video short, I'm not going to go fully in depth on all of them. Just kind of show you briefly why I took the trades, etc. But first of all, we got UCAD, right? So UCAD, as you guys know from previously in my videos, one of them I mentioned, we're now at a weekly area of supply, right? So this last down close that enforced this new move to the upside, right, creating equal highs in here. This is an area and a true market inefficiency, a true market gap that acts as a support, right? So this is true support and resistance, not the ones that retail traders enforce onto the markets by drawing a few lines where they think markets bounce in between. No, this is a true gap in the market where price tends to see reaction off of, right? So based off of that, and we're at a down close institutional candle, we can now expect to see maybe not, big signs of, demand. I mean, not supply if I said supply previously, but demand within the market, right? So it may not be, demand that's going to give us a proper reversal as such, but it may just be, a slight demand that's going to give us a retracement back into these areas up in here, right? But for now, that's what I'm looking at. And my main point of interest was this 4-hour institutional candle here. So this is the candle that, enforced this huge markdown, tapping into that point of interest, breaking through this supply, etc. Breaking through this demand, right? So this 4-hour point of interest is the point of interest which is respecting bearish order flow in 4-hourly, and has created this markdown. So I was expecting price to come up and offer me some potential sales to continue selling this off, because overall my bias is taking out these weekly lows, because we are coming for them, and DXY is suffering quite bad at the moment. So these weekly lows are potentially targets in the future, and then maybe come up for these equal highs, but that's still a long way away. So focusing on current relevant price action to the time frames I trade. 4-hourly, right? 4-hourly, as the trades were based off of retracements into that 4-hour point of interest. Once we bottomed out on the 15-minute, I've seen my divergence. RSI is moving up, price is moving down, showing a shift in momentum to the upside. We got our structure here. We've got our last bottom out break of structure to the upside. This was the last high that made the new low in here. That's now been broken. So structure has been broken on the 15-minute. And I've marked up this nice demand area, this last down close, this left imbalance, etc. And I was expecting price to return back into here, create kind of a head and shoulders pattern before continuing to the upside, right? We didn't quite get that, and therefore we adapt with what the market shows us, instead of waiting and thinking the market has to do what we want it to do. No, it doesn't. We adapt. Simply as that, right? So boom, if we go down to now, maybe let's try the 5-minute, right? We start to form this range in here, right? You could say these are low resistance lows and you like liquidity to be swept just before my point of interest. That is true, but to further the price action on the 1-minute, I see some nice institutional movements happening within this area. So boom, we've got this up in here. We've created some equal highs in here, and we've kind of formed another, yet again, head and shoulders. We broke this high, so we could expect retracements into this now. So on the 1-minute, I was looking at potential reactions up in this supply area and this 1-minute institutional candle, and that's what we got, right? We got a nice little sell-off, but that's nothing to confirm yet our bias, but because there's no break of structure. and then we got that breakthrough of that supply zone. So now we've had that last sell off before breaking through this supply area. So for me personally, that's my ideal entry technique. So I was just waiting for confirmations to come back down to my last point of interest, which was this 1 minute down close candle that swept prior up candle liquidity, left in balance, and also had rest and liquidity sitting above it, right, in the form of equal lows in here. So that's what I was expecting. Boom, we came back, we tapped into that perfectly, and then as you can see, we we came up. My targets were 1.24700, nice whole level within my area of interest. But to be honest with you guys, I did close out somewhere within here at 1 to 12, and yeah, that was that trade. Market did offer re-entries as we broke through that 4-hour supply area, which yet again was a beautiful entry, right? So again, we had that 4-hour point of interest, and we broke through that point of interest, showing signs that demand's taken over within the market. We broke 4-hour structure now, so we are definitely bullish on the 4-hourly. Potential retracements deeper to carry on going into next week, but for now I was looking at what enforced that break of that 4-hour point of interest. And again, if we scale down, what do we see, right? So we see a little base in here. Let's just say that's a 30-minute base in there, but scaling it down, we got a wick on wick action here, which acts as a base on a different time frame. So if we go down and find that, right, we got this price action in here. Market spent time in that area before breaking through. This is where supply and demand was fighting. We got that last sell off, this last sell move in here, where we broke then up. So this sell move was interesting for me, and then I narrowed it down to the candle, the last down close, which has not yet been mitigated, and which also mitigated previous price action to the left, right? This institutional candle in here mitigated it perfectly. Entered off of left in balance as well, entered off of the open of that candle, beautiful, wicked into it perfectly, targeting new highs, structural targets, nothing above, because overall we are bearish on UCAD. So the only thing we can confirm is these highs getting taken out. So boom, perfect. So that was that. This trade I had marked up and everything. I didn't actually take this trade for full transparency. This one was the only one I took, but this one was a beautiful case study that you guys can also have a look back and reflect on, right? Going into my next trades, what do we see? Let's go into EU now, right? EU was an absolute monstrous trade, but I didn't hold out, right? So if I rewind it back to this area in here, what are we saying on EU, right? So obviously we're now forming this bearish order flow. We've got our high in here, new low. We've reacted off of this daily POI, but now we've broke structure in here. So we kind of offer in between, like, you got this high, low, lower high, lower low, right? So kind of that bearish structure on the daily, right? Although we've come into this last down close institutional candle in here, we could expect some reaction right off of this area and potentially go for new highs. As we know, foreign currencies are all kind of bullish against the dollar at the moment, so we wouldn't expect Euro USD to come really much lower than this accumulation of price in here. And this candle is the last real kind of candle that has not been mitigated. Now we've come in and mitigated that candle, we can expect at least like 4-hour retracements into this base in here, right? There's a nice base drop, left in balance. We could expect market to retrace if we are going to continue to go lower, see some reaction off of this, boom, perfect, or break through that and continue our weekly narrative of bullishness, right, going in for the rest of the week. But as of right now, I was looking for trades going up into a 4-hour point of interest, right? So boom, as I narrow it down, what do I see? I've got this nice price action in here. We got rest and liquidity above it, so that was my overall bias, hoping for it to come down in here, offer some lower time frame confirmations to take it higher. It didn't quite give me that, so we adapt accordingly, right? So boom, what do we see? Markets reacted off of something over there. I haven't quite marked it up yet, but this price action here is more relevant for me, right? This price action offers as a break of structure and a nice wipe off within this area of interest in here, right? So boom, we got this low that made the new low, this high that made the new low, right? We kind of ranged out through Asia, and then perfectly we formed that mitigation of this point of interest. I believe it was a 10 minute base in here, mitigated that perfectly, and then broke structure, broke this high in here, confirming bullishness to the upside. This candle in here, if I go down to was it 10 minute, maybe 30 minute, got this first 30-minute base in here, which you know, I don't think that's the candle I was playing off. It might have been something different, but anyway, previous lows were taken, right? We've now tapped into that point of interest, mitigated that, and gone up, right? So we've swept liquidity, making this a valid area of interest for me. If I narrow it down to my actual entry was based off of a 1 minute. There was a nice reaccumulation of price within this area, and also, you know, it swept liquidity. You know, we had these prior lows in here, and we swept that. You know, mitigated price action within this area, filling in imbalance, and you know, order flows will be mitigated down in here. We've got this nice, you know, order flow, respected demand, you know, again perfectly. And then, you know, this was the last real point of interest for me, which hasn't yet been mitigated, which swept liquidity and which could show as potential reactions, right? Again, you could be saying, like, how do you know it's not going to react if this in here, right? You don't. You just got to wait. If prices, you know, dropping that bearish going into your point of interest, and you're not really getting a slowdown in price and, you know, some confirmations of divergence, Wyckoff, etc., it's not a valid point of interest, right? So now we've marked up a point of interest. Now we're identifying, you know, what's happening in current price. So current price, we are forming an accumulation schematic. We've got our, you know, seller's climax, you know, secondary test in phase B, signs of strength, you know, then we get our spring perfectly tapping into my point of interest, confirming entry, right? We've got a divergence, everything's there, market momentum, and then, you know, what did we do? We, you know, went up, smashed targets, which was at the new high, perfectly. And then I closed out because my targets were based off of, you know, 5-minute structure, this high in here, right? I had some higher time frame bias. I think it was a 2 hour, 1 hour maybe. Yeah, so this 1 hour candle up in here, which if we was going to see some reaction, it would be off of this high because this high made that low in there. So this is the last real structural real point in the 1 hour, and that we could see some, you know, supply coming into the market. But, you know, I was just targeting highs, happy with, you know, 1 to 14, who's not, right? So, boom. And then obviously if I go up to a 1 hour, you'll see what happened next. Pretty crazy. Boom, this 1 hour candle just absolutely demolished, and yeah, created more liquidity to the upside. We also got these equal highs, and you know, our 4 hour base which we're targeting. So I could have held that out for longer, but you know, I was expecting, you know, this to actually be filled in, so that was kind of a short-term trade based off of what I was seeing current price action. But for now, I'll go on to my next trade. GJ, this was a quick little scalp. If I rewind it, boom, what do we see, right? So boom, as you can tell, for me personally, we're at a point of interest on the 3 daily. We've now, you know, took these internal highs and here, these low resistance highs, and we're showing some reactions of this supply zone, right? So we're showing some reaction up in here, and yeah, we started to form some divergence, etc. Let's go on to the started to form some divergence, you know, on the 1 hourly, I believe it is. Yeah, so RSI is going down, markets, you know, going up, showing a shift in momentum, forming bearish structure. We got a high in here, low, lower high, lower low, you know, lower high, lower low. You could say that's our real lower high, but point of interest up in here, right? So that was a 2 hour candle. Boom, market showed reaction off of that. I was expecting, you know, from this high to this high, this is our range we're trading between. So from up there to down here. Perfect. And then yeah, I was expecting some reactions, and what did we get? We did get some reactions. We didn't get Wyckoff, head and shoulders, etc., but we got bearish order flow coming into the market. We got mitigations of point of interest, and this was a quick scalp. I saw some market needed to be rebalanced. You know, we was quite extended coming up to that, so my targets were just short in here, this area, expecting some reaction based off of this. So that's why my take profits within there. Also, you know, you could expect GDP to, you know, the yen is very overly extended to come a lot lower, but for me, you know, it's a quick scalp this one. I saw some nice price action, and I got in based off of, you know, this last up close that mitigated this base in here perfectly. So yeah, then I took entries based off of that, and you know, we died and smashed the 1 to 8 pretty fast, and continue to drop. So that was that trade on GDP JPY. Not much in that one, just a nice price action I saw, and I entered quite aggressively. Finally, moving on to the big boy, right? Gold. Gold has been amazing this week. If I go, you know, back a bit, and take you through some of it. I won't go through all of it because there's been a lot for me personally on gold this week, but you know, based on higher time frame analysis, right, you know, we've got this daily point of interest. I'm intrigued and want to see be met at 1600 potentially sooner rather than later, but for now I was looking at a 3-day point of interest for retracements, seeing some lower time frame confirmations and, you know, taking it down to that, right? But this week I was looking at retracements instead of 3-day. So based off of that, you know, I go down to a 4-hourly. What do we see, right? We're forming, you know, kind of a Wyckoff setup. We've got our, you know, divergence in there as well, and we've broken structure to the upside, which I went through the trade on my previous video, this gold trade here. So that's what we took that. And now we broke 4-hour structure, you know, kind of confirmed bullishness on gold and potential retracements up into that 1800 area around there. And yeah, so price action within this area going into the start of the week. If I rewind it into there, so Sunday night I was doing my markup, right? We had this, you know, pullback going into Friday last week, and then, you know, we had an area of, let's say, is it a 4-hour candle? Yes, this 4-hour point of interest in here, this drop-based drop, which, you know, it was a deeper retracement than I would expected. Broke through, you know, reaccumulation in here, but you know, this candle could have still seen some reaction based off of, because this was the candle that, you know, swept liquidity, blah blah blah. And then we started to pull back up, you know, once we broke through that supply zone again. So I was expecting that to, you know, hold and then, you know, get deep retracement into this candle in here. But that didn't hold. We broke straight through it. And what did we do before we broke through it? You know, we formed this nice selling pressure, you know, before we broke through it, right? So, you know, always look at the price action, you know, as it's coming up to a point of interest. But this wouldn't be, you know, enough for me to take sells or buys based off of. But once we broke through that supply zone, I can now look for potential entries based off of, you know, what was happening in here. Sellers and buyers fighting over the direction of the market, right? Boom. So demand took over, and we was looking at, you know, buyers within this region in here. So if we remove that, that was the last real selling pressure before, you know, we brought up. What do we see? So we got this nice 5-minute base. We mitigated a 1-minute candle with that as well, I believe. Yeah, mitigation of that. We swept prior liquidity with that 5-minute candle, and, you know, that was my point of interest. So obviously once we got that, where is it? There we go. Once we got that, I was expecting price to come in this zone in here and, you know, show some reactions. Was it? Yeah, 5 minute. And show some reactions. This happened at around 5 a.m. So obviously I wasn't up at that time. Plus it's Sunday night, it's market open. Obviously I'm not going to be taking trades then, especially not at 5 a.m. in the morning. I wasn't up, right? So this trade I wasn't in, but I woke up London and I saw, you know, prices reacted perfectly off of my, you know, markup I marked during the night before, and, you know, we started to form some price action, which, you know, ultimately led to me getting a re-entry. So, you know, came into here and we formed this price action in here. So we came up, created these equal highs, came down, mitigated what we needed to in there, and then, you know, started to mark up again. My entry looked like it was based off of this candle within here perfectly. Alright, we created these equal highs, and, you know, this looks like a distribution. We had this supply zone in here, you know, we mitigated off of something in here, perfect. But based on, you know, price action, this looks like a reaccumulation rather than distribution. Came down, tapped that perfectly, and, you know, we shot off. So that was that. We ended up smashing targets at the highs there. Boom, perfect. There we go. Before reversing, and then, you know, price played out again, going to the next day. As you can see, this is when I got a re-entry. So we came back, we mitigated something down in here. Was it a 1-minute candle? Yeah, yet again, nice 1-minute down close. You know, we came up, we mitigated that, and then we started to form some price action in here. So we got our last low, last high that made that low, came up, you know, came back, mitigated this point of interest in here, you know, respecting the order flow to the upside, broke structure, broke this supply zone, kind of making equal highs up in here. And then this was, you know, what my entry was based off of. So I took half of my position at the open of this candle, and then I was going to enter the other half, you know, filling in this imbalance of this candle here, focusing on this, mainly this base in here, right? We didn't quite get that entry on that second one, so our 0.5% was, you know, triggered on the open of the candle. and we, rallied up. My targets were at 1742 for this trade. However, I partialed out at the previous highs, and we didn't quite get 1742. We missed it by about 5 pips, I believe. So yeah, we came very close to my targets, around 7 pips, before we had a little retracement. So once we fully confirm that break of this structure point in here, we've now made, we've got our range there. That's our structure now, and we're coming up to a nice area of interest, 1750 range, where we could see potential supply coming into the market. So going into the next day, again, what I was looking at was, if I go and play price action a bit more, let's see what formed. Yeah, so this was another trade. I didn't take this trade again, but I'll show you what I was looking at. I was already in the UCAD trade at this time, so I wasn't looking for this, I don't think. But we've come down, we mitigated something within this area. You could say we've broken structure, so we could now expect a retracement back up into these areas for a rebalance, right? Seek and destroy liquidity beneath these lows in here. Now we could expect retracements, right? So this was mainly based off of lower time frame, price action. We've got our perfect, Wyckoff forming in here. We've got a spring, we've got a test, etc. And then we just entered based off of break of structure in here. Nice down close, retracement, tapped. Standard entries. And then targets will again back up in this supply zone on the 1 hourly, I believe it is. Yeah, this 1 hour base. And if I play this out, we smack that perfectly, I believe. Well, we're coming up to smack that perfectly. Anyway, within that area, I caught a little sell, which ended up hitting me at break even. Yesterday, I see that we, I was expecting, selling pressure off of this area, and we started to, distribute and show signs of bearishness just before that. So I started to adapt to the market and what it was telling me. We have our distribution up in here. We've got a mitigation. I entered based off of base in here, and a break of this demand zone, reaccumulation that happened within this area here. Perfect. So I entered off of that, and market dropped to about a 1 to 10, I believe it was. We are 1 to 11, and then it came and stopped me out at break even. No partial was taken, so this was just a break even trade. So that's all my trades I'll take you through. So that was my UCAD trade. This one here, perfect. Showing me in the trade. This was UCAD markup. Showing my Telegram. GDP and Euro USD trades that day. I believe that was Thursday. This one. And then also, my gold trades in here, the ones I was showing you guys through, right? So everything's posted in my Telegram, in real time. So make sure you guys subscribe to that for content, etc. Sometimes I post some analysis and also some trade ideas in there for you guys to potentially capitalize on. By no means am I a financial advisor, so I'm not giving out trade ideas for you to take. I'm showing my analysis. It's up to you if you want to take them on. But yeah, subscribe to my Telegram. Also get on my Instagram. I post some content on there as well. And if you're reaching out for some mentorship of my Instagram, just drop me a DM and I'll get back to you as soon as possible. But yeah, that's all I got for this week. And going into next week, I'll update you guys.